If you're self-employed and not paying taxes quarterly, the IRS is already charging you penalties, and the state too if you live in a state that collects income taxes. Let me explain how estimated quarterly taxes work, how you pay them, how you estimate them, and how to avoid getting burned by the tax agencies. I'm Jim Flouse. I've been helping self-employed contractors with bookkeeping, tax preparation, and tax strategies for over 20 years. I've prepared thousands of returns. If you'd like to cut taxes, increase cash flow, and build profit, hit the subscribe button for weekly tax tips and business insights. If you're paid as a W-2 employee, taxes are withheld every payday. But you're not paid as an employee if you're a business owner or an S-Corp shareholder or a member of an LLC. No, you don't have taxes withheld, but you're subject to income tax on the profit in your business or your share of that profit if you are part of a group of owners, such as a partnership or a corporation. So, at the end of the day, the IRS is not going to be happy if you just pay your taxes on April 15th. Yes, your tax return filing deadline is the 15th of April, but did you know that the payment deadlines are quarterly? Yeah, the IRS built the tax system based on the old English tax system, which was pay as you go. Back in the old day, farmers, ranchers, people who were self-employed in the old country didn't pay by having their taxes withheld. They had to send in the money regularly. That's what you're expected to do. So how does this work? The IRS rule of thumb is if you expect $1,000 in self-employment income this year, you're required to pay quarterly. Now, the quarterly deadlines are a little wonky. They are April 15th, June 15th, which is 2 months later, September 15th, and then January 15th of the following year. So the deadlines are not the typical quarterly deadlines, but those are when the IRS is expecting payments. If you're in a state that has income tax, likely the payment dates are the same as the IRS. So how much should you pay? Well, this is the hardest part, and you can use one of two methods. The first method is just to take last year's taxes, divide it by 4, and send in the tax amount on the deadlines I just gave you. The second option, and this particularly applies if you are a growing business, is to project what your income will be and the tax. How do you do that? What I tell my clients is, look, how much is business up this year? If it's up 10%, increase your quarterly payments 10%. If it's up 25%, increase your quarterly payments by 25% over the year before. Now, here's the common mistakes that I see all the time. Business owners wait till April 15th and then make the payment. Again, you're going to get penalized. Or they guess a flat dollar amount on their income tax, but forget to include self-employment tax. Don't forget, if you're self-employed as a sole proprietor or a LLC, you're not only going to have to pay your income taxes quarterly, but also self-employment tax, which is 15% of your profit. Here's a pro tip. It's really the smartest approach. Set aside 25% of your profits in a separate bank account. Call it your tax account. At the end of every week, set aside 25% of what your profit was for the week, or at the end of every month, do the same. Then when the quarterly tax deadline comes along, you have 25% of your profits set aside, send 20% to the IRS, send 5% to your state. Generally, that will be enough to cover and not have you in a situation where you're paying penalties and interest because you didn't pay quarterly taxes. If you're unsure how much you should be paying, or if you've fallen behind, that's exactly what tax planning is for. That's why you should be sitting down with a tax professional on a quarterly basis to see what your profit is, estimate your taxes, discuss strategies to reduce those taxes, and then send in estimated quarterly payments so that you're not behind, you're not penalized, you're not in doo-doo with the IRS or with your state tax agencies, which in many cases the state agencies are even more aggressive on this than is the IRS. I'm Jim Flouse. I trust you have found this helpful. If you'd like up-to-date insights on taxes and business tips, please subscribe to my YouTube channel, and I'll see you next time. Thank you.